Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Folks, we have to talk about the price of Bitcoin. I see a lot of fearful comments and sentiment that's brewing in the market, and people are getting kind of bored as well because Bitcoin has been consolidating for weeks now. Actually, it's coming up to a couple months, and people are like, is the bull market over? What's going to happen next? Now, we don't have a crystal ball, but we can look at the facts and the data and look at what has happened historically and look at what the charts are telling us to kind of form a thesis and to be prepared for what may come next. And I've been here for multiple bull market cycles, so I'm not worried, I'm not scared, and I'm being very transparent with you guys. What will scare me is if Bitcoin was to tank and drop below 40K. That would scare me. And that would be like, uh-oh, something is very different this time around. All models are wrong, all signals are wrong, right? Now, we're nowhere near that. But keep in mind that Bitcoin did an incredible run up, guys. That Bitcoin ETF buying, and we're finding out who's been buying: JP Morgan, Wells Fargo, some of the biggest firms and banks in the world. And they drove the price of Bitcoin to all-time highs before the halving. That's historic. That has never happened in the history of Bitcoin's lifetime. So with that type of run up, you need a pretty good cool down. And that's what we're in here, guys. And we've been ranging between the 56K to the 64K range, right? You see Bitcoin just chopping, it's grinding. So I think it's going to be a grind until we find that ultimate bottom within this pullback zone, and then we bounce upwards and we keep going up. Now, if you recall, a couple of weeks ago, we saw a bounce in Bitcoin's RSI in the daily chart, but I said, guys, let this play out because I've been faked out in the market before. What happened? We got faked out. That RSI kept going downwards. The question is, has it hit its bottom? I don't know yet. It could go a bit further down. And I think later in May is when we find that bottom and then we bounce. So that is what I'm personally anticipating. But when I zoom out on this chart, when in doubt, zoom out. This looks bullish to me. There's nothing bearish or detrimental here. So I think we're still on track. And don't just take my word for it. Let me share some perspectives from different analysts. So Adrian Zdunchik of the Crypto Burb team said, another week closed above key long-term support, preventing major corrections. So Bitcoin is building support here, guys, and then it's eventually going to bounce. Now, here's what Rect Capital, a great analyst who does great chart analysis, said. The Bitcoin post-halving danger zone, which is in the purple zone, officially ends tomorrow. So that doesn't mean the price can go down a bit lower. It's just this is the normal cycle area where we see these major pullbacks. And it's healthy because usually there is a buy the rumor, sell the news event. So, the halving's coming up, the price goes up, and then there's a sell event on that news. Doesn't mean the bull market's over. But Bitcoin is going to consolidate, build the support levels, and then start running up. So he gave a comparison to the 2016-2017 chart. Now, here's what Crypto Wizard had to say. He calls it the great shakeout. In 2013, 12 weeks of consolidation before the bull run up. 2017, 9 weeks of consolidation before the next bull run up. He says it's been 9 weeks of consolidation around the previous all-time high for Bitcoin so far. Not long left. Don't get shaken out. Absolutely great advice. When in doubt, zoom out. You see these patterns on the charts historically. Here, Crypto Michael highlighted a sentiment chart showing where are we in that sentiment chart, and it's called a Wall Street cheat sheet. And right now, he's saying we are correcting from the first sentiment extreme. That seems very likely, right? Because we had that extreme run up, Bitcoin hitting new all-time highs before the halving, and then this pullback, he's calling it a bear trap. But after that is renewed optimism, then FOMO, then euphoria. You want to be selling that FOMO and euphoria phase because the dumb money crowd comes in at that top area, right? Now, I didn't make up that terminology. That is a terminology that existed before crypto. Dumb money and smart money. Smart money is buying the blood on the streets, buying the lows, buying the corrections and pullbacks. Dumb money is buying the pumps and the euphoric blow off top. You do not want to be in that dumb money crowd. You want to be on the smart money side, selling, taking profits, and then waiting for the bear market and buying back in. And I'm talking from experience, guys. So great opportunities, especially in crypto, because it moves faster and there's more capital. You make incredible returns. I'm sure many of you have experienced it with not only Bitcoin, but altcoins. Altcoins generally outperform Bitcoin. So people have asked me, hey, have you been buying the dip on this pullback? Yes, but not Bitcoin. I bought the Bitcoin dip in December 2022, 2023, when people were scared as hell because I learned my lesson in previous markets. Now my portfolio's up. What I have been buying is altcoins, especially those altcoins who haven't really done any type of retracement move, haven't taken off as yet, because the altcoins lag behind Bitcoin. So I took my positions on the altcoins. I bought some AI coins like Fetch and Render and so forth, adding more to my bags. Not financial advice, do your own research. And here you got Raoul Pal highlighting some macro charts, talking about the Fed liquidity, GDP growth, and that the aging population is contributing to a lower GDP growth. What does that mean? They have to service the debt for the aging population. That means print more money. And this is a global issue. The boomers are aging out globally. They're going into retirement. They're coming out the workforce, less production. And you guys know how that all works. This is economics, right? So he says with high debt and low growth, the Fed needs to create liquidity to service the debt equals debasement, meaning they're going to print. Quantitative easing is coming back. I've been telling you guys this since last year that we were at the bottom and they're going to slow down on the QT, the quantitative tightening cycle, right? They've already paused rate hikes and we've already seen some backdoor bailouts or bail-ins, whatever you want to call them, of certain banks. All of that is adding liquidity to the system, and this is happening globally. And we're going to go back to the normal status quo of let's keep printing because we are in a debt-based system and they have to service them. And that's how they keep things going. So once you understand that, you understand that asset prices are rising with the debasement of the currency, but the asset prices at least outpace and give you a higher return than you putting your cash in the bank and earning next to nothing, and you're losing your purchasing power. So it's not only crypto, you can put it in real estate, into stocks. So I'm diversified. I do put into stocks. I do have a investment property. And but as Paul Tudor Jones said, Bitcoin and crypto is the fastest horse in the race. So you get a faster, higher return with cryptocurrencies. So I hope you guys understand. You want to look at the charts, you want to look at the macros, the fundamental, and much more. All of these things are aligning to higher prices. Now, quick word from our sponsor, and that is VeChain, which is one of the top layer one enterprise blockchains out there. VeChain is building incredible Web3 and decentralized application ecosystems. They're working with many big brands around the world, such as BMW, PwC, Walmart China. They are also partnered with Boston Consulting Group, building incredible Web3 technology, guys. VeChain has a very fast and energy efficient blockchain. They have great speed and security, and that's why many enterprises are choosing them for different sustainability projects and much more. So VeChain is a project I'm bullish on. I've been holding the token for years, and that is the VET token. So if you'd like to learn more about VeChain, go to vechain.org or visit the link in the description. Now, folks, we've been talking a bit about the SEC getting slammed by many folks who are calling them out for their hypocrisy. And because of Donald Trump putting the stake in the ground, saying he supports crypto, and that if you want to, crypto regulations and someone who's friendly to crypto, vote for him. Now, we know how politics works, right? But I said that was very important, not so much because it's Donald Trump, the person, but the position, the office, the seat, former president, and obviously the Republican candidate running against Biden. Replace Trump with somebody else, right? But the point is the position, the narrative coming from that position is incredible. And it puts game theory into play here where Biden may now be forced to, start to support crypto. And there's been a lot of critics coming out slamming Gary Gensler and even by the Biden administration. And one such was Mark Cuban. He's been on a tear lately, and I'm trying to get him on the podcast. So please tweet at him and tell him to come on the Thinking Crypto podcast. But he's been on a tear lately, criticizing some of the Democrats, criticizing the Biden administration, saying, look, you're going to lose crypto voters and they're going to make their voices heard in the election. So I absolutely agree with Mark here. And you see Trump's statements are getting picked up by many political media sites, such as Politico. Here's a headline from just this past week: Crypto is Trump's new weapon against Biden. Wow. And it says here it's the first time crypto has become an issue in a general election of a presidential race. Damn right. Guys, I've been saying it for months, right? Even the last year, crypto is a ballot issue. It's not the number one issue. It may be number three for some people, number five, but for some people, it is number one. And I know some people on its face, they're going to be like, what? How can crypto be number one? Well, people's money and investments are in crypto, and they're trying to make a better life for themselves. So part of being able to make a better life for yourself is being able to invest and make a good return. And especially with inflation going crazy and all the economic situations that are happening. So if you're going to cut off a technology and asset class that is helping people to grow their net worth and grow their wealth so they can live a better life, then they're not so much going to be concerned with other issues, because at the end of the day, every man and woman is looking to better themselves and to position themselves where they can live comfortably, where they can then maybe take that money and do other things that are in alignment with their values, right? Because it does take capital. It does take you to be in a financial position to be able to contribute to a campaign, start some sort of fundraiser, whatever it is. You guys know what I'm talking about, right? So it goes back to people's well-being. And if you cut off this amazing technology in the United States and you demonize and you have scumbag regulator Gary Gensler and a corrupt Elizabeth Warren attacking the industry, what do you think is going to happen? So this is a smart move by Trump. Once again, I'm not endorsing Trump. I'm not endorsing Biden. I'm just trying to get you guys to think about what's happening here. This is not a political podcast where we, talk about, oh, this candidate is better than. No, I'm giving you the facts. I'm giving you the news, and you make your own decisions. You form your own conclusions from there. And here we got Avichel, who is the co-founder at Electric Capital. I'm actually going to have him on the podcast pretty soon. He gives some insightful information here, retweeting Mark Cuban's thoughts about Gary Gensler and the SEC and the Democrats losing votes. He said, "This is a conversation I have weekly with mega donors in the Democrat Party. Joe Biden," he tagged him, "is shooting himself and the Democratic Party in the head by listening to Elizabeth Warren and her incompetent staffers." Wow. Boy, I'm going to ask him a lot of questions about this. But as you can imagine, he has a hedge fund. They've raised like billions of dollars, right? And it's not just him. It is other companies and funds and VCs who donate to politicians, right? We know that's the game. It's very telling that he's coming out and saying this. So imagine he's not the only one. And he's saying, like, what the hell are the Democrats doing, right? And even people who are hardcore Democrats are like, yeah, Biden and the Biden administration are so wrong on this. So I think people can see clear as day that this is just a nonsense, and Elizabeth Warren is losing the narrative, and she's corrupt as hell. But remember, this is all her being controlled by the puppet strings, right? The puppet masters being the banks and TradFi incumbents who are getting disrupted, who want to slow this industry down so they can catch up. That's why BlackRock, Fidelity, and all these guys are not getting Wells notices, but Coinbase, Ripple, Kraken, all the startups are getting Wells notices. I don't think I need to explain that further. So very insightful, and that these guys are talking to different political candidates and so forth. And Jake Tversky, he highlighted that Politico article about Trump's new weapon against Biden is crypto. He says this piece should be required reading for everyone in the Biden administration and on his campaign. Crypto is a live issue in this election, and anti-crypto is a losing platform, especially among swing state voters. Time is running out to change course. Now, guys, let's move ahead. We got some news here from Franklin Templeton CEO. So Franklin Templeton CEO says ETFs and mutual funds will be on the blockchain. Absolutely. I've been telling you guys for years, the token economy is coming. Everything tokenized on the blockchain. Artwork, cars, real estate, much more, securities, commodities, all these financial products, everything will be running on the blockchain. No more opening or closing bell in the stock market, 24/7 trading markets. Global markets, guys. That's what's coming up. Opening up tons of liquidity, opening up tons of secondary markets and even tertiary markets. So I've had, the chief investment officer at Franklin Templeton on, Sandy Call. If you guys recall, I interviewed her maybe a couple months ago. They, of course, issued a Bitcoin spot ETF. They are also tokenizing on the Stellar blockchain, Stellar Lumens. So Jenny Johnson, the president and CEO of Franklin Templeton, a financial firm with $1.6 trillion in assets under management, recently reiterated her pro-blockchain stance during an interview with Bloomberg anchor David Westland during the 27th annual Milken Institute Global Conference in California. Among the hot topics discussed by the two, Johnson had plenty to say on tokenization and generative artificial intelligence. When asked how Franklin Templeton benefited from tokenization, Johnson quickly applied, "First of all, I'm a huge fan of blockchain and the technology." She described a situation where the company ran a side-by-side experiment to process account records using both traditional methods and blockchain for a period of 6 to 8 months. As Johnson put it, the results were quite positive. "We were astonished by how much less costly it was to run on the blockchain." What a statement, folks. What a statement. This technology is here to stay. It is the future. It's running on top of the internet. It's going to get very fast adoption. And I think the numbers already show that the internet was the fastest adoption of any technology. Now blockchain and crypto is outpacing that because, of course, it's running on a much more efficient network, and that is the internet. It's a very efficient technology, and we think it's going to open up a lot of new investment opportunities. And honestly, eventually, I think ETF and mutual funds are all going to be on the blockchain. She attributed this prediction to the huge costs associated with verifying data between disparate systems, a problem that blockchain was intentionally designed to solve. Johnson further pointed out that financial institutions and stakeholders will need to verify data between external parties once the data is reconciled in-house. Folks, I hope you see what's happening. This is not coming from some random Joe Schmo, some guy on the street corner. This is coming from the CEO of Franklin Templeton, a company that existed before crypto and blockchain, that has trillions of dollars of assets under management. They see the benefits. They see the potential of this technology. They're going through their trial and error and testing phase now, and clearly they're seeing positive results. That's why BlackRock and all these firms are not only issuing ETFs, but they are tokenizing. They're even custodying some of the funds and reserves of many companies, crypto companies out there. Bullish times are ahead. I hope you are exercising patience. I hope you are zooming out on the charts and not getting shaken out by pullbacks and bears and what they may say and scary stuff. Unless it's the apocalypse, markets will continue to go forward and grow. Once again, when in doubt, zoom out. Zoom out on the stock market, zoom out on the crypto charts, and you will see it. Zoom out on the real estate charts as well. And this all goes back to liquidity, debasement of currency. And as they keep doing that, asset prices will rise. Obviously, the adoption and utility is a next layer that adds value. But I'm trying to give you the holistic picture here, guys, and I hope you see it. Thank you for watching. Thank you for listening. Folks, don't forget to grab a copy of my book, Rethinking Crypto, The Crash of FTX and the Rise of Safer, Stronger Assets, which covers tokenization and what the future of crypto looks like. Grab a copy, guys. It supports the podcast. Buy a copy for a friend or family member who doesn't understand crypto, who's a skeptic. This book will help them to understand it, guys. So I appreciate you all. Thank you for watching and listening, and I'll talk to you all later.